Friends, hello. I come to you from a Nissan Rogue parked in my grandmother's parking lot, in escaping children, escaping noises, and trying just to have us time talking about stocks and what we can expect this week. So, obviously, thank you all so much for still putting up with me here. It's going to be a while because after Grandma's house, I got to go to Uncle's house. But Uncle's house should be a little calmer in places where I can escape to. So let's talk about the situation, what's going to happen here in 2025. And there's things happening here with certain stocks, talking about small cap stocks. And this is a lot what Tom Lee talks about too, where he's talking about 2025. He thinks they're going to be huge for small cap stocks. And Tom Lee, obviously, if you know Tom Lee, he is very bullish on the market, and he's got a great rap sheet to back that up. And he's been bullish, and he's been pretty darn right so far. So it's always good to have people that you look up to, whether it's people on YouTube, professional analysts, whatnot. It's still good just to, you can't do this alone. Everyone needs to vibe with someone, and that's why we all connect and we talk to each other. I like more talking than just disagreeing with people. We can all have our own thoughts and process how things are going to go, but generally, when you even listen to me yap here, you're trying to find someone who's maybe looking down a different avenue of what Palantir, SoFi, or something may bring to the table. And where I listen to people, there's people that mentor me on YouTube that I've listened to for years now, that you've probably never even heard of, but talking about a few small cap stocks here that essentially, when it comes to earnings, they're not doing great, but they have FOMO attached to them. They have hype attached to them for what's coming here in 2025. And I thought it was very interesting to talk about some of those. So one of those right now is QBTS. I mean, I pretty much get 20 to 30 comments a day on this stock right now where people are like, please talk about this more. And this whole quantum computing situation that's going on right now in the stock market is essentially becoming the new zeitgeist, my favorite word here in the market. It's becoming nothing but just the talk of the town, where you have all these quantum computing companies that have come out of nowhere, especially quantum computing itself, who the stock is running up enormously. But D-Wave here becoming another huge just talk of the town. And listen, I'm not, every one of these companies, every one of these stocks, I'm not trying to be like break them down or be mean about it whatsoever. I promise you, some of these I'm heavily investing in, and probably will make some sort of investment in just in case things do start to pan out here for them. But quantum computing is really just like a big conversation right now. And D-Wave here, it's already shot up to $10. And when we look at the earnings history of this company, it's not good. It's not even meeting what it should be. But what is happening here is that, a lot of stuff right now is already being priced in for what could be potentially breaking down here in 2025 with the stock market. So with that conversation, you have D-Wave here, who is already grabbing people's attention. And one reason is because it was so cheap just weeks ago, and people are looking at this, well, this is one of those quantum computing stocks, I'm gonna start buying it up. But it's getting trapped into this big bubble right now of quantum computing stocks. It's just another sector of AI. I talked about this a week ago or something like that, where you have this big conglomerate of bubble of tech AI stocks, however you want to break that down. But then in that big old bubble, you have these different sectors of tech AI, whatever you want to say here. You have Palantir over here, who, and BigBear, who does its sort of thing. Then you have, quantum computing over here. And then you have, of course, your chip stocks that actually, chip companies that make the chips, that actually produce them. And then you have NVIDIA over here, the chip like AMD, things like that, who just, they design the chips, but they don't actually physically make them. So you have all these different, just roundabout big cycle of AI stocks. Okay, we'll just say that. And right now, they go from, blah, blah, blah. In 2024, I dare say that, chip stocks were the talk of the town. I mean, people were just buying left and right. And I still think they're going to do very well here into 2025. No doubt about that. Nvidia is going to start to run here. It's already showing signs of that. AMD doing very well. The next 5-10 years of those companies are probably going to be even bigger than what we can expect. Essentially, what is going on right now, and if you haven't caught on to it, tech AI is becoming the new oil business in the stock market. There's no doubt about it. I mean, it is just ungodly amounts of money right now. It's paving new roads. It doesn't make sense. It doesn't have to make sense. It's just doing what it wants to do, and everyone's trying to be a part of it. So what is that doing? That's putting overflow right now into other AI sectors. Talking about D-Wave here, quantum computing stocks, and there's a lot more. I've talked about them, but this is just one in particular that I get more comments about than none because it's been so cheap. It has so much talk around it. So essentially, what's going on here with D-Wave? D-Wave, yes, it's acquiring deals. It's getting a lot of attention, and it's being run up. And I'm going to be honest with you, just watching what's happening here in the AI sector with AI stocks being ran up to ungodly amounts of money. Because some of them, yes, are doing great quarterlies. Some of them, they're doing okay. And some of them haven't done a whole lot. But it's FOMO. People want to be a part of it. So D-Wave here, could it run up to $15 to $20? Absolutely, it could, just off FOMO. At this point, a lot of these AI stocks, they don't need good quarterlies to run to $10 to $15, to run to a low double-digit number. They don't need that right now. People aren't worried about that. What people are worried about is they don't want to miss the boat, and that's what you're seeing. Can you make money off that? Of course you can make money off that. People, with D-Wave here, people were buying this 2 weeks ago at $3, $4. Look where it's at now. They've almost tripled their money. With that conversation too, it's SoundHound. Perfect example with SoundHound. SoundHound 4 or 5 weeks ago was at $4 to $5, okay? $6. Now it's almost at $30. It's looking for $30. Why? Because the last quarter that came out was really good. And then on top of that, they acquired a lot of new deals. And so right now, what's happening? Investors are pricing in what's coming with SoundHound. So if this next quarterly that presents itself with SoundHound to wrap up 2024 is good and shows that earnings are increasing, they're doing well, SoundHound's going to keep that $25 to $30 range. No doubt about it. Now, I could see on a stormy weather day here, SoundHound will sell back down to a $16 to $18 mark. I'm hoping it does. Selfishly, I hope it does because I want to, increase a position there because I think regardless, SoundHound's going to do very well into the next, decade here with AI stocks because it's so ahead of the game where it's at right now. With and that's a whole, I forgot SoundHound. That's a whole nother bubble there, little bubble in the tech bubble. So you have that too. And then we get to the conversation of BigBear here. And BigBear, if you know my history right now with BigBear is a stock that I am taking a chance on. I'm taking a risk on. And people, you guys are getting mad at me when I say that, but I have to say that because listen, if BigBear was just like killing quarterly after quarterly and it was just like big deal after big deal, I would be on here saying like, everything's totally fine. BigBear is going to continue to do well here. You should put all your money in BigBear. But that's not the conversation right now with BigBear. BigBear, it's getting attention because, it's capturing, it has some new positive deals that it's acquired here. It's getting attention from investors. People are starting to push it up. It's run to $4 and some change here, doing very well. I'm not expecting much more out of it, or am I? So right now, we could see the start of a run right now with BigBear where investors are going, you know what, it's a feeding frenzy out here and I'm going to keep pushing. I want BigBear, and they're just buying up BigBear. So that is definitely the situation that is going on right now with BigBear. And it's just, I'm not expecting a whole lot out of BigBear this year. I'm not trying to push BigBear to, crazy expectations here in 2025 because there's no evidence to do that right now. Like, using SoundHound as an example again, SoundHound has evidence that it should have a really good year here in 2025 with deals increasing, earnings increasing. It's so much hype and FOMO around it. Those are positive things, okay? BigBear is showing signs of those, but smaller signs. So yes, really what I'm buying Big Bear for is the next year, 2 years here to see if A, they can start paying off debt, B, really start to acquire bigger deals, government contract deals. That's what we're really wanting here, and they're doing that. They're starting to show signs of that, but we need more. We need a lot more here. It's still a very, very small tech stock, very small here. And honestly, I would love to see them have a partnership. I would love to see another AI stock pop in here and say, hey, we're going to partner or we're going to invest in this company. Kind of like what Nvidia did with SoundHound. So those are things that I'm kind of personally, selfishly looking for here with that situation. So listen, friends, there's a lot more small cap stocks here, but really my point of what I'm saying here is that there's stocks right now, especially in quantum computing right now, that are probably going to run here in 2025 just off hype, FOMO, people wanting to be a part of it, people trying to get in at, the right levels because they think it's going to run more, because they think quarterlies are going to start to increase here, because they think deals are going to start to increase here. And I'm sure a lot of them will. The good thing about a lot of these AI stocks compared to the last, big movement in the stock market, the last big hype movement in the stock market, it was EV stocks. It was, electric vehicle stocks. The problem that we found with electric vehicle stocks is that A of all, there was way too many. B of all, maybe it's A. B is that their EV companies are so expensive and they kill the investors first and foremost, to where the companies, they can't get out of debt, they can't make a profit, and we're still seeing that in the EV, market. It's 100%. I mean, even Tesla still, is doing phenomenal when it comes to earnings, but still, I mean, this is something that Elon Musk has said outright, like, listen, it is highly expensive and almost near impossible to make a profit off electric cars. Okay, it's very expensive, and that's something that we've seen just go right through the whole EV market, where a lot of us, 5-6 years ago, we were buying these EV companies stocks because it was the hype, it was the new thing, and we were all wanting to be a part of it. What we found out really fast was that these EV companies were struggling financially because it was so expensive to run these warehouses, employees, metal, materials, everything. With AI here, it's not as expensive. It's expensive, don't get me wrong here, but technology, it's not where they're having to buy metals, facilitate, trucks here, there, contracts with material, pennies on a dollar. What they're trying to do is profit. They're able to make bigger lump sum of revenue. And that's why when these AI companies, they release their earnings, they're massive. I mean, they're just massive, not to mention everybody wants what they got. So I definitely think this next decade, and obviously trying to break that down to a smaller time frame for people, this next year is going to be very well for a lot of small cap stocks that aren't even probably producing good quarterlies. Okay, so listen, I know this is a very bearish talk / bullish. I would be, my main concern with what's going on here and what's going to be happening here in 2025 is just don't spread yourself too thin, if I can say anything here. I think there's going to be a lot of opportunity, but there's going to be a lot of opportunity to get in at the right time and maybe sell at the right time with some of these companies at certain times, because I'm going to tell you what, if like D-Wave, these other quantum computing stocks, or even something like Big Bear here, that it's a little bit of a different avenue when it comes to, if they don't start producing good quarterlies or start meeting expectations on quarterlies, we're going to start to see more downslide. Investors they're not going to keep patience with what they're plowing money into, and when these things get pushed up to so much money, people are going to start taking profit. Don't be naive to the cutthroat nature of the stock market investors. That people will start taking profit and they will leave you behind. So I guess what I'm trying to say is just don't get too deep into some of these low cap stocks, to where if D-Wave goes to like $20-$30 here and you're still buying, I think that would be a huge red flag, considering it's not making quarterlies right now, because people are going to start to take profit here, no doubt about it. Now, something like talking about SoFi, Palantir, some other AI stock, and obviously SoFi is not an AI stock, but I'm throwing it in there. There's other things that you can be plowing your money into that still have huge potential, meeting quarterlies, getting huge contracts, and that have huge things coming down the pipeline here. So just, don't put all your money into companies that aren't producing good earnings, because at the end of the day, what are we wanting out of our stocks that we're putting money into? We're wanting money back. We're wanting the company to make money. That is the fundamental number one issue and concern you should have when putting your money into a company. Is the company making money? Are they making enough money where they're meeting quarterlies? There's all kinds of fun and cool, unique stocks to put your money into and that are like revolutionary and neat. But at the end of the day, it doesn't mean they're going to work. Are they selling their product? Are they meeting quarterlies? Are they meeting expectations? What does their next 5-10 year outlook look like? Okay. Like I said, I like all these companies. I like them, but just don't spread yourself too thin. Okay. A lot of them are cheap. They're affordable right now, but be very wary. And this is the conversation I've had about Big Bear. I love Big Bear, and I'm thinking Big Bear could have a huge turnaround this year. Okay. If it doesn't, I get it, okay? There's a lot of competition out here in the AI sector, a lot of competition right now, and they're all fighting for the number one position, no doubt about it. Friends, I will talk to you soon. Tomorrow's Monday. I'm excited about what we're about to see in the market this week. I think the market's going to really start to uptick here very, very soon. I'm really excited, and I think all of you should be too. Friends, take care of yourself. Bye-bye.